What's up everyone? Things are about to become a bit more difficult for home buyers, so let's talk about how this changes your plans if you're looking to make a move, coming right up. Hey, what's up guys? Some rules that regulate the qualifications for an insured mortgage will be changing, and this will change how potential home buyers will qualify for a new home. And before we get into it, if you're here joining me for the first time, consider subscribing to my channel to stay in touch and to get the best real estate tips and market information. And now let's dive right into the content. CMHC announced on June 4th a few changes to their lending standards, and a lot of people are now wondering how this will negatively impact their qualifications as a home buyer when these changes kick in on July 1st. But first, if you aren't sure who CMHC is, they are the Canada Mortgage and Housing Corporation. And one of their primary goals is to help Canadians reach their goals of home ownership. And keep watching to the very end of this video to hear why I think that these changes are the right decision. And you can learn about who CMHC is, as well as their Canadian housing market outlook in a video that I recently released, which I'll link in the card up top and in the video description below. And now let's start off with who these changes will actually apply to. If you're in the market to buy a home and you have 20% available for your down payment, then these changes will not apply to you. But if you're buying a home with less than 20% down payment, then these changes will apply to you, because CMHC's mortgage insurance kicks in when you are borrowing more than 80% of the purchase price for your new home. And the purpose of this mortgage insurance is to protect lenders from the risk of borrowers defaulting on their payments. And the announcement for these changes came soon after they released their market outlook, which forecasts a decline of 9 to 18% in average home prices over the next year. And this is because of anticipated higher mortgage debt and higher unemployment. In fact, many homeowners are currently relying on mortgage deferral to get by right now. And this is a program that started back in March, which means that deferring mortgages won't be an option anymore for a lot of homeowners later this fall around September, since this program is only available for up to 6 months. And after that, many jobless and struggling Canadians are expected to resume their mortgage payments. And if financial or employment situations haven't changed in the past 6 months, several homeowners will be at risk of defaulting on their mortgages. And right now, Canadians require a minimum of 5% down payment to purchase a home. But rather than increasing that percentage to, let's say, 10%, the first change that CMHC decided to make was to increase the percentage of a buyer's income that would go towards a mortgage and other debt. As of July 1st, the gross and total debt servicing ratios are changing to 35 and 42% respectively. GDS is simply calculated by using anticipated mortgage payments, property taxes, and utility costs in ratio to annual income. So if that number exceeds 35%, then you would not qualify for mortgage insurance under these guidelines, making it more difficult to get a mortgage and a new home since you would have to come up with more than 20% for your down payment. The total debt servicing ratio, or TDS, is the same thing, but also includes other debts like car payments, credit card debt, and other lines of credit, and this should not exceed 42%. If you want a quick way to figure out what your ratios are, check out the video description where I link the online calculator on the CMHC website. And if you're gaining value from this video, hit the like button and share this video with someone who you know who is looking for a home right now, or that is looking to get into the market. The second change being implemented is pretty straightforward. As of July 1st, you'll need a credit score of at least 680 to qualify for mortgage insurance. And this is an increase from the previous credit score requirement, which was 600. But in my opinion, this won't make such a huge difference, because Equifax reported that 70% of credit scores were at 720 or higher since last fall. So this change might only impact about 30% of active home buyers. The third change that comes into play as of July 1st has to do with the source of the funds used for down payment. Non-traditional sources of down payment that increase indebtedness will no longer be treated as equity for insurance purposes. And what this essentially means is that they're now banning the use of borrowed funds to help with down payments. And this could be borrowed money from unsecured personal loans or unsecured lines of credit. But I think this change will only have a marginal impact on most home buyers, since it could be more common that Canadians are relying on personal savings, investments, and financial help from family to help with down payments. And I think a lot of people will naturally disagree with these changes when they come into effect on July 1st, because these changes might completely remove the option for some people who are looking to buy a home. And be sure to let me know in the comments below what you think of all this. But personally, I agree that increasing the standards for deciding who can afford a mortgage is the responsible thing to do, especially during these uncertain and difficult times with no clear indication of when the Canadian economic situation will normalize. And also, because this tightens the market by shrinking the pool of active buyers, this could actually drive down home prices in some areas, since less buyers would be competing in the market. Also, if you're currently someone who owns a home, you might see a negative impact to your home's market value, which really is only a consideration consideration if you're in the market to sell. And if you're curious to learn more about how the Toronto real estate market is trending, check out my weekly Toronto real estate market update here on YouTube. New episodes are released every single Monday, and you can check out the link in the description below for the playlist or click on the link up top. And also hit the like button if you gain value from this video, and subscribe to my channel to stay in touch for the best real estate tips and weekly updates. Thanks for watching, and I'll see you in the next video.